Hello, everyone. Welcome to Longtrepreneur. My name is Yawar Abbas, and today our guest is Faisal Aftab. He's one of Pakistan's most prolific investors who looks at the world from a financial technology layers lens. As the founder of Zayn Capital, Faisal has played a pivotal role in shaping Pakistan's fintech landscape. His investments in companies like CoLabs, Haball, EduFi, Abhi, and Bazaar have been instrumental in Pakistan's growth. Please enjoy our conversation to learn more about his venture capital investing and thinking about building the financial layer of Pakistan's society. All right. So I'm not sure what time is it right now. I guess I'm guessing 7 o'clock in the evening time. So I guess just to
It
bring
is.
the conversation, what's your morning routine like? Are you a coffee kind of person, or tea or chai, or what's it all about?
Yeah, so my first thing in the morning, I have a glass of apple cider vinegar, and then 20 minutes after that, I have a black coffee, like uh, an Americano, effectively.
Got it. Makes sense.
And if
So
you want another device, my favorite coffee device is the Jura. So it's one button, it crushes fresh beans and churns it out. So
got it. Great. So for me, I'm not a coffee kind of person. I like for me it's mostly water. But in summertime, I don't eat anything until like late lunch or early dinner. But I drink like mango juice a lot, and in during summertime, we get like special mangoes I hear that get imported from Pakistan. So we have like all these boxes that it's like $30 per like 8 or 9 pieces of mango, which is expensive here because it's being imported here. So that's a little about my
yep.
morning routine. What was your
I
childhood?
remember that
Yeah,
in New York. I think
yeah,
we used to get like a box for back then it used to be like 20 bucks and it was like three
yeah,
mangoes. So
yeah.
you paying a premium.
It's a similar situation here, so that's how it works. So, Faisal, what was your childhood like growing up? Were you an outgoing person or introverted or in the middle of both? Like what was your personality like?
So I would say in the middle. I wasn't too introverted, wasn't too extroverted. I'm the middle child, so that kind of fits that middle child
Got it.
syndrome, where you're neither too shy, but not you're not too extroverted because you always have an older sibling when you walk in a room, especially when you're very young, right? And
Right.
so usually, if somebody asks you, "Hey, how old are you guys?" the older sibling takes that leap, and so it's. I think that plays out later on in life as well.
Got it. So I'm sort of, gonna jump around a little. So the questions I have come up with, they touch upon personal endeavor, personality, family, life, venture capital, economy. I know you're a big economy person who understands the intricacies of macro and micro environment, which is great. So the one question I want to ask you in terms of economy, do you see BRICS becoming the global reserve currency, replacing the US dollar? Or do you think it's just something that's not going to come to fruition?
The short answer is no, but
Okay,
that I'll kind of caveat that with not immediately. I don't see them becoming the sole reserve currency of the world. I
right.
eventually see the world having a very different world reserve currency, which may have a, it may be closer to the IMF SDR, which is special drawing rights,
Mhm.
that has a voting stake every 5 years that assesses trade and the currency in circulation and kind of creates a unified currency. So actually, when Pakistan and these many of these other currencies borrow from the IMF,
Mhm.
they don't actually borrow in dollars. They borrow in SDRs, which is
Okay.
called special drawing rights, and they
Mhm.
actually trade stronger than the dollar, stronger than the pound, yen. You can actually look it up SDR. You know, we do USD PKR. You can
Yeah.
do USD SDR, Euro SDR, and you can see it's a basket of currencies today that has the euro, the pound, the yen, and the dollar. And the renminbi is trying to become a part of that basket. Interestingly, those are, by the way, also the currencies that are the SWIFT system, the current
Mhm.
analog banking settlement system, um, which obviously the renminbi is not there, but in the SDR the renminbi is there. So that's kind of indicative of where the world is heading. I think the BRICS. I mean, I guess let me backtrack on the BRICS. Why I think the BRICS is politics. So let's put it this way. You know how when in Pakistan, when NQM suddenly goes and starts talking to PPP or PMLN or PTI to try to
Mhm.
help them in the coalition government. So it's the same thing that happens at a global macro scale, right? It's big
Mhm.
powers that want the reserve currency status because reserve currency status is a huge advantage because then you can actually be in a surplus and you can export inflation out and then use you leverage the float to basically continue to grow and thrive and become a stronger superpower. So,
Mhm.
and all empires in the history of the world have had a reserve currency, whether it's the pound, whether it was the Romans, whether it was the Germans, whoever was in charge, basically had their currency and coinage in circulation. So, from our world today, the reason why I think the BRICS, if you look at the BRICS, first of all, India is not really a true part of the BRICS. It is a part of the BRICS, but really it's a strategic partner of the US, which
Mhm.
basically makes it the weakest link in the BRICS. So I think they'll have to retool. They're trying to expand it. What I do think they're trying to do in the short term is create some sort of a monetary unit to create barter and currency swaps to buy
Mhm.
commodities to somewhat de-dollarize. But it's really difficult to de-dollarize given that how pervasive the dollar is. Now, 10 years later, the picture might be completely different. That
Mhm.
doesn't mean that, Pakistan, for example, as a country, would have 100% of its reserves in the BRICS agreed upon unit of currency, whether it's backed by energy, backed by rare earths, and a combination of different things. If you look at the members, some have energy, some have rare earths. Um, but for right now, by the way, most of the currencies are backed just by they're debt backed, right? Since
Mhm.
71 in the world, so they're not really backed by any commodity or constraint. So it's a long-winded response, but it's a very complex question. The reason why I say that is that everything you're seeing happening in the world today, down to every impact, I would say every little thing that you political or moves in cricket, it's all actually linked to this. It's currencies.
Mhm.
Currency is power. Reserve currency is absolute power, and everything else is downstream, whether it's geopolitics, control of political setups and countries, and trade tariffs and invasions. So I operate in that layer to then kind of look downward from there, and everything else to me is the downstream effect. A lot of
Got
people call that conspiracy theory. I call that reality because actually, if you focus your energy there and read all this stuff, it becomes evident decades in advance.
got it. You know, it's fascinating how you like explained it in such a eloquent way because I've had conversations with economists and they're like, well, like it's funny how sometimes even economists cannot answer a question in a way that uh like regular people would understand. So it's great for
It's
that.
so, sometimes academics can cause analysis paralysis. I think
Right.
the answers are very simple if you look for them. I mean, why did I look for all this, right? Um, I woke up in 2008. When I say woke up, I couldn't believe that when the GFC happened, that I lived in New York City, worked in New York City, and companies I thought were titans. I was a part of the same system and invincible. I would call them, in my mind, demagogues. Whether it's Goldman Sachs, Blackstone, BlackRock, Citigroup. In a span of a few days, they effectively almost imploded and lost 98% of their market cap and stock value. So it
Hmm.
showed me how fragile the system was. So that actually compelled me to, at that same time, I went to go do my MBA. A year afterwards, I wanted to get more academic.
Hmm.
Um, so what I did was I studied finance all over again, and what I realized what I was being taught in school, or whether it's Harvard or any educational system, they conveniently skip the monetary system parts. Nobody actually teaches you what inflation is in all reality, what money is versus currency, and how the current system we're in is a system that started in 71 when the US de-linked from gold. The previous system started in 1945. They call it Bretton Woods 145, gold backed
Hmm.
dollar. And then Bretton Woods 2, where it's a debt-backed dollar, which eventually then evolved to the petrodollar. So once you learn this entire bedrock of the system, and then you realize that the 10-year US debt treasury has been replaced by gold in the system,
Mm,
That then really shakes things up and kind of, so I traced down what happened uh, from that perspective. So I think it was more of an, personal level interest than less academics. And then obviously when you apply that to business, it makes more sense, right? And it ties into venture capital because we're in the exchange of value disruption. And as you're moving from the financialized system of the world that started in 1980 and I think ended in 2020. And now we've entered the new digitized version of the world where just like anything that was not financialized was called the informal or black economy, even though it had economic consequences. In the sense that if somebody's in the black economy and they're buying stuff, it still drives the price of soap or televisions up. Similarly, now it's going to be captured, or the requirement would be that it has to be in the digital economy.
mm,
And as money goes from analog to digital, the difference is the current money, the paper money, is more analog, or even the settlement systems are analog. And digital money would be that money has to behave like cash, that I give you something and immediately it's settled, versus a credit card or a check. So it's things like that are evolving, and then everything we're doing in venture capital is actually linked to this today. But I can dive into that later. But I was just explaining the conceptual element of it. It's
right.
the world is not as difficult to understand if you know ignore the noise,
Mm,
uh, which usually comes in the form of news headlines.
right.
And then once you stop looking at that and just start using your brain, actually the whole thing just unfolds in front of your eyes. It's
Got it.
it's a little strange, and I think
No,
everybody has a wake up call, right? So for me, the 2008 global financial crisis, I was like, wait, I thought this was an invincible system. How can everything go almost to zero in a span of like less than a year?
yeah,
And since then, we've just been printing money and try to bail out the system. So so that it becomes predictable where the end result is going to be.
got it. So, what skills did you hone while working at Deloitte?
I think the biggest advantage of working at Deloitte for me personally was at a young age. What to do is in consulting, they kind of grab you right out of college
Mm,
and pretty much throw you out there in the work. It's kind of like throwing you in the pool and saying, "Hey, go run to swim." I mean, they give you training,
mm,
but you end up going to about 15 to 20 new companies in a span of just 24 months.
mm,
Um, I started off in their Midwestern practice right out of college, and so my first client was in Chicago. It was actually uh, Rockwell Group, which is a helicopter manufacturer. So and primarily military suppliers. So I had to get all sorts of clearance and stuff. Like it was like like it was a big deal. And I was a Pakistani at that time. Now I'm a Pakistani American. So I was a Pakistani on H-1B, so my clearance took a little bit longer. But
mm,
then I moved within 6 months to New York and started living working in the Manhattan practice, or the Northeast practice. There, I pretty much had all the bulge bracket banks. So everyone from Bear Stearns to Lehman to JP Morgan, Morgan Stanley, Blackstone, BlackRock, Rockefeller Group, and the New York Stock Exchange. These were my clients. And so what you end up learning is in a span versus working in one corporate job and learning systems in one company, you end
mm,
up going in and you're coming in from a bird's eye view as a consultant. So you kind of get to see the whole picture from the top in a company versus just as an employee. So I think that's one of the biggest advantages of working at a consulting firm. It catapults your brain uh, very quickly into mapping the structure of the corporate world.
got it. So, Faisal, one thing that I have noticed among VCs, perhaps for all the right reasons, not many startups go after like the government tech or gov tech industry. Why is that? I mean, I have seen that happen across the board in North America or in Canada, where there's not many companies that are building technologies or even military apparatus for the government or defense departments. Um, so why is that disconnect between technology and the government, or is just not
So
worth it?
like, no, every fund has a mandate, right? So for example, when you said military technology, let's go to the original venture capital concept, right?
Right.
It started from DARPA, which is the U.S. Defense Department setup that does R&D, and there's a huge nexus with your Ivy League schools in Stanford and Berkeley and Caltech. And I grew up, by the way, in the Bay Area in Silicon Valley. So growing up in Berkeley Hills, where
Your
my dad was
father
agency
was
Berkeley.
a army man, right? In the construction or
Yes,
engineering. Okay. Okay.
he was a technocrat in the military. He was from the Corps of Engineers, and then decided to take a sabbatical to do his PhD at UC Berkeley. So
Mhm.
I spent most of my formative years of my life there. And so I saw some of this stuff firsthand, right? The grants in the US, the way it works is the grants come to professors who are then doing R&D, very similar to what NUST is. By the way, my father, when he came back, he was basically wrote the charter of NUST in Pakistan, which was basically built after the whole setup in the US. So
Mhm.
most of tech innovation has come out of these research products and grants from the US, which were projects of the US government for various defense and security apparatus setups. Um, from there, you basically had Intel Q, which basically is also a pseudo-linked, defense-linked fund that backs some of the original communication and tech platforms. So, if the way I see it is that usually it's grants and government funding that tends to focus more on reg tech. It's not necessarily as profitable for us unless you have an inside unfair advantage,
Mhm.
just like you saw with Obamacare in terms of the website, the way it was developed.
Mhm.
These contracts are very, it's with contractors, preferred contractors. So, it's not something that we as private investors really want to go into sometimes with dealing with the whole bidding process.
Mhm.
So we tend to go more for innovation. So the downstream of what took place earlier on the 70s and 80s, those projects turned into Google. For example, that was a funding. It was a project at Stanford. There were two students, Larry and Sergey, that were working under. I'm forgetting the guy's name. He was an Indian professor, and it was just a research project on how to map the dark web. And then basically everything that was mapped became the white web, or it's searchable on Google. And
Mhm.
so it's a search engine, right? And more of an advanced algorithm. So when you look at the evolution of that industry, you realize that look, betting on the private sector is far more lucrative because a reg tech may not be able to go IPO and to get you the type of returns. It may just be simply a software as a service product, and
Mhm.
that may do very well, but it may not list, right? So
Mhm.
that's the risk you're taking. Now, with that said, I can tell you, like, there's a company called Shape Security. They are the best premier, effectively, security firm. And I'm talking about like this is network security and overall system security. Um, their clients are like the MI5 and CIA, the FBI, because they build and governments because they build, you know, infrastructure and firewalls at such a level that secure, sensitive, highly classified data is protected. And so Sequoia's back them, Planet Perkins back them. So that does happen, but those opportunities are less so for us in Pakistan today versus the private sector.
Got it. So I'm gonna sort of, go back a little further. Amongst your parents, who had more sway over you?
Um, I think in different ways they both had sway. My dad definitely was there more from a discipline perspective and more
Mhm.
from imparting wisdom because he's a philosophical person and an intellectual. So he would do that. My mother is very strong on communications and her the English language skill sets, and so they both nurtured in their own way. So my dad is more serious, and my mother is more relaxed. So I get parts of her personality and parts of his personality.
Got it. So amongst your parents, whose hat do you put on when you're investing in, let's say, fintech companies? Like what skills, like what traits or market trends or macro trends you look for when investing in fintech companies or companies that are platform based, focusing on Pakistan's market.
So look, there's the you can say the kind of structured finance side, right? Like you're looking at basically projections, doing an analysis, comparables, risk analysis, and the whole shebang, right? We do
Mhm.
that. Um, because I invest early stage, I also have a thesis. And so I'm
Okay.
investing with a very concerted thesis. I was an entrepreneur in my previous life and I've done multiple businesses. So every time I failed, the successes are successes. That's fine. Every failure would have taught me it was basically it was usually the idea was not that bad, but the timing of the idea was off. So had I waited 3 more years or 4 more years, then that's when the idea would have hit, right? The other thing is because I have a global macro thesis, I'm looking at layers of fintech and by the way, I invest across the board. So I've done B2C, which is grocery plays and your online ticketing and beauty and personal care, fashion. I've done the equivalents of Bazaar, or I've invested in Bazaar, which is a B2B play, e-commerce play. I've invested in Zerai, which is a raw materials marketplace, and then I've done the 50% of my portfolio is fintech. But everything I'm investing in is with that lens, that where we in space and point in time. So it's more thesis driven, which is more philosophy driven, since nobody knows the future. But you can kind of see the regulatory points, and you effectively are visualizing the world where it's going to be through indicators, not randomly, by understanding, for example, what the IMF SDR is and how those 5-year votes are linked to geopolitical instability, whether it's Brexit or the Syria operation or many other things that transpire. They're linked to IMF SDR votes in terms of plus minus a year, because geopolitical tussling and positioning for transit routes and various other mechanisms of things. So keeping those things in mind, then you can see what pattern it is. So for me, when I'm investing personally, my thesis is that we're exactly close to the last transition, which was in 1939, where the industrial age was in its final exponential stage of disrupting the agrarian age, which is the landed class. And so that was also about the dollar disrupting the pound. And the same thing is playing out today, where the BRICS, as you started our discussion with, are challenging the dollar. The only reason why I say we're close is that I do think we're coming to a currency reset. When I say reset, we're probably about 5 to 10 years away from the regular dollar, which is the analog dollar, shifting to a digital dollar, which would leverage the blockchain technology or crypto technology. And the reason why I'm very confident on that is because they're out of monetary policy at the central bank level. So it gives them the traditional monetary policy, which is interest rates, movement of interest rates up and down, and money supply, because they would then be able to do programmable money, which then allows them to airdrop or get it directly to industries or individuals for stimulus at a future date quickly, versus currently the velocity is very slow because you have to unload M2 into banks, and then banks basically have to go and lend, unless you do M3, M1, M2, M3 together, and then do helicopter money, which is like stimulus checks, right? Which is very arduous. But even with stimulus checks, you had a lag effect, so they couldn't manage it, right? When they gave you stimulus checks, sometimes they made it in the mail 3 months later. Once you have a direct wallet with whether it's the Treasury or whether it's with the Federal Reserve, they do call the program Fed Now, which is already ready. That's pretty much your relationship with the Fed directly. So they could literally pop you a stimulus check in a matter of an hour or seconds, actually, if they decide on a policy. So those type of things is what I'm keeping in mind. And then, and I'm just being very frank on the thesis. And then you're also seeing that as the world changes from the SWIFT system to nodes, you're seeing those nodes get set up in all the central banks, right? So Fed Now in the US, in India, you have the UPI, in Pakistan, you have RAST. Those will end up being the nodes for settlement, both at the individual level and then outwards as well. So it's traceable money, traceable in terms of transactions.
So, do you see cell phones or like our mobile phones becoming a decentralized node on a larger network? How do you see that playing out in, say, 5, 10 years from now?
Yeah, I mean look, that's already the case, right? Your IMEI number and that device is effectively the best tracking mechanism that's been invented in history. So everything you do is being tracked there, and so it's your movements. I'm talking about patterns and behavior patterns. So that's already kind of there. So if you look at what RAST is, what you're talking about distributed computing in terms of a node, that may happen. I mean, that's debatable. That's more of like whether it's Ethereum or Cardano or any other token that's basically using processing power on leveraging various process power of various devices. That could play out, and I think that is going to play out in all honesty in the future. But my thesis today is that very simple, that look, the world went insolvent in 2008. Since then, we've been basically pumping money and printing money to prop up the system. And now it's getting to a point where we printed so much money that inflation has shown up in developed markets. We've seen it in developing markets in Pakistan. 10% was a very common inflation number even 10 years ago in Pakistan. Now that number is about 26% year on year. But now when you're seeing 9% inflation in the US, which is a reserve currency, that's usually not a good sign. They may bring it down temporarily. It's kind of a trade-off, right? You raise rates, destroy the economy, and then bring it down. So even if they say that we're going to have a soft landing, it's still going to destroy a fair chunk of the economy before you can actually cut rates again. Because if you don't, then inflation will go to 20, 30, 40%. So that's the definition of what they're trying to accomplish. So keeping all that in mind, as I'm investing personally, what I believe is that they're going to have to move towards capturing the informal economy of the world. So if you look at a pattern specifically, um, each, as I mentioned, it's a debt-based monetary system since 1971. So every time they keep printing, in order for this system to continue and sustain, you need to have more borrowers. And typically, once you run out of borrowers, you basically have to bring new borrowers online or new countries online. So let's go look at 1998. We had a crisis. Pakistan had a crisis. Everybody had a crisis. And the Eurozone was brought online. And countries like Greece and Spain and Italy and Ireland and Portugal, they all effectively were made creditworthy using France and Germany's balance sheet. And lots of debt was sent out. And then in 2008, there was a massive implosion because they just borrowed like crazy. So you needed new economies. So the BRICS were created effectively as a block. And then credit was expanded in that block. And then basically the N11, which is what's about to happen to us in this crisis, is basically Pakistan, Egypt, Nigeria. Like you've got a bunch of these countries in that block, right? The only difference is, unlike those developed economies, we are undocumented economies. And there's no real credit history or data patterns because we're undocumented. So you don't really know if I'm lending to an individual. There's really no way for me to validate them apart from their electricity bills. Even that's dubious at times because many of them don't pay it, or it's in their landlord's name. So there's lots of issues there, right? So therefore, you're gonna have to develop their credit history, and that's by building the overall ecosystem, the digital world. So whether it's like their travel patterns, because we're moving from Experian and FICO and all the traditional credit scoring mechanisms to credit scoring engines. That's what will allow rapid credit expansion in this part of the world. You're not going to have that many mortgages, home mortgages, and auto mortgages. You might have that in the elite 5-10% class, but the rest of the economy is going to be relying on more nano lending and microfinance lending. And so that's going to require all sorts of data points that have to emerge from different platforms and user behavior habits. And so it's somewhat long what I'm explaining, but it's a complex equation. But these are all the things you have to digest in order to then make the call. Okay, is this the right time? So for example, I chose early on when I was doing fintech that I'm not going to invest in a B2C fintech in Pakistan because I don't feel we have enough data to lend to creditworthy individuals. And your NPLs, which are your losses basically, are going to end up skyrocketing. So I avoided concertedly any buy now, pay later. I've done a lot of B2B2C. So Abhi is a B2B2C. EduFi is a B2B2C. NeoPay is probably the only B2C, but it's more of a payments platform. So the risk is less. There's still KYC onboarding. We're not lending there today. We're building their transaction data. But they're also doing that for the SME side. Haball is doing the same thing on the supply chain side. So I've stuck in that particular side, and others that have gone into B2C lending realize very quickly that their NPLs skyrocketed to 30 to 40%, which is not sustainable in a market like Pakistan. That's not to say I'm not going to look at B2C lending, but I think we're about 2-3 years away from it. I want the data there first.
Got it. So
I hope that makes sense in terms of
no, of
timing.
course
And
it does.
picking
I'm just listening very attentively and carefully. So do you see FBR in Pakistan integrating with Zayn Capital's companies to enforce tax payments?
They already are. When I look at, like, for example, LAM, they already have their portals integrated with a lot of online e-commerce platforms and with even like fashion designers and a lot of restaurants. Now, the main issue is the main issue comes in down to your retail level individuals and the SMEs. They don't want to integrate the brick and mortar I'm talking about, and because they have a huge political lobby, so that's about 50%. So the total addressable market in that segment is $250 billion.
Mm.
that's not being documented, right? So this is just a matter of time. It's going to happen. It just takes a will. The problem we have right now, or in general, we've had in Pakistan, I'm not specifically targeting any government. I'm apolitical, by the way,
Of
is that
course.
every time somebody wants to even implement this, and that's been a requirement persistently from the IMF to expand the tax base,
Mm.
they can't do it because political governments can't take this tough decision and lose their vote bank. So you're going to have to demonetize the rupee at some point and do what India did in 2016. That's what China did. That's what India did. Each one of them is a pretty massive economy. Pakistan's not a small economy. This is a trillion to a $1.3 trillion economy. I can assure you of that. The $350 billion number is a joke, which is our official economy. And I'll give you a case in point for that. There's out of 241 million people, which is the official census of
Mhm.
Pakistan as of this year. We're bigger than Indonesia. Um, Fifth most populous country in the world. Only 3 million, about 7 million registered taxpayers, see 3 million filers, out of which about 1.5 million file nil. So about 750 to 1 million people are paying taxes. So that's the bank population is about 13%. They claim is 28%. That's counting my bank accounts. If I have 3 bank accounts, the triple counting it. So there's pretty much an undocumented economy. And the case in point is, even with the rupee devaluation of literally 100% over the past 2 years, the impact when you go out, apart from that small block of urban middle and lower middle class
Mhm.
that is basically left their lands in the village and moved into shelter in cities and is now living in rented houses, like small rented houses, and is very susceptible to energy prices and rental inflation. I would put that at a block around 35 to 40 million people. But the rest of the country, and I, by the way, feel sorry for them. I'm not saying that I don't feel pain for them, but the rest of the 240 million people, generally they're in a rural population or they're sitting in urban undocumented minting money.
Mhm.
And case in point would be when anywhere you go to any shopping mall in Pakistan, not just the high end, like any bazaar, it's packed. There's a
Yeah,
supply side shortage. And so typically when you have massive inflation, people can't afford most more things. Here, the problem is not affordability. It's there partially, uh, but it's more of a supply side issue because we can't import things.
got it. That's a great, sort of understanding of how the whole macro works. So, how has being a father of two daughters shaped you into the business and tech leader you are today? Um, do you want to do you want to leave a world where your daughters can, excel and, be safe, or what's that influence of your daughters that they've had on you?
So it's great to become a father. What happens at that point is that your risk appetite changes, right? So for
Right.
example, before I'd go skiing and take risks, I don't do that anymore. Or I wouldn't go skydiving. Maybe once I've gone off to college, I'd feel more secure doing that if my joints and backbone can sustain it by that time.
Right.
But I guess what I'll say is yes, it definitely makes you think about the world, because the worst thing that could happen is that you bring your children into this world and we end up in a similar to World War One and Two, where the world is in chaos for 15 or 20 years.
Mm.
So that would not be a pretty situation. But the way I see it is that, look, um, there are good things about a completely digital world and there's bad things about it, right? I'll start with the bad things. So let's say 15, 10, 15, 20 years from now, the whole world is going to be a unified network, and there will be no activity that you do that will not be traced and tracked or not known. So crime will go down significantly. Um, as we all know, anything you do online is traceable.
Mhm.
So, traffic violations, bribes, corruption, a lot of things will go disappear, because when money starts to behave like a bank account, I think it becomes very difficult to justify a $5,000 bribe or $500,000 bribe when it comes into your bank account. So usually it
Mhm.
has to be cash, right? So just imagine a cashless world 10, 20, 30 years from now. So I do think there's a positive side. So there'll be a lot more harmony, and technology by its very nature is deflationary. So
Mhm.
most things will have a better price discovery. Case in point would be your cable bill with Time Warner or whoever your provider was. At one point, I remember in 2010, 11, 12, it was getting ridiculous. I mean, I was paying between internet and television subscription, I was paying like something like $280 a month to $300, right? Now that bill would be down to what, $12.99 for Netflix, maybe another $9.99 for Disney, and a few other subscriptions, right? So that's the fact that factually states that it's deflationary for that industry.
Mhm.
Also is the same when you look at Uber. It's cheaper to actually take an Uber in some cities, not necessarily New York and London these days, but in some cities, actually even there it's pretty cheap if you think about it. If you factor in insurance and parking, and lease payment, it's cheaper to just take an Uber around within a smaller within your city, not long distance, obviously. So technology is deflationary. It will make a lot of things um, fairly cheap. Now here comes the dark side, right? It also kind of puts you on a very traceable radar of the government, and typically that when no government in the history of the world has at that level of power, where they can actually see everything you do 24/7 and predictively predict, certain patterns. They can actually implement social scoring. So that part is somewhat, it's somewhat depressing, but at the same time, if it is what it is, right? We all live in a world where there's different. For me personally, the world changed post 9/11. The US was a very liberal country, and they changed significantly post 9/11. Some of the laws like NDAA or the Patriot Act, I felt were very draconian. So these are parts, and they were very broad in their approach. I wasn't averse to eradicating terrorism. I was more worried about how they would be used, maybe to quell dissent. And I think some of that's played out in the political tensions in the U.S., where you've had both sides abuse some of those laws to quell the other side. So I'm just giving an example, whether it's playing out all over the world: China, UK, Russia, India, Pakistan. So those are some of the things that do concern me. But look, I mean, this is what my father always said to me: if you're generally a law-abiding citizen and you follow the rules, then it's very difficult for someone to really question you, and you're fine within the system. So I think it's better for more those of us it's a better world for those of us that follow the rule of law, versus the guys that are in the informal economy are taking bribes. I think they're going to have a tougher time existing, and they're going to have to apply some intellect. I think I will say this, and since you talked about kids, because a lot of I spend a lot of time thinking about the future, which helps me in my investments, but it's also for my kids. Um, the most disruptive play that's coming, which is going to be jobs, and that's going to come in the form of AI. I don't want to talk about AI just because the kind of the blockchain or crypto type, hype right now. Everything when it starts is in a bubble, but then eventually you see the true value of it come out. I'm already using AI in multiple facets of my life to create efficiency, including in terms of sometimes writing memos or doing analysis, because
Mhm.
I'm training it basically and trying to learn it, because I think if I don't, I'll become obsolete.
Mhm.
So I'm definitely trying to have my kids be more creative and not just be logical, because anything is logic based, if then this, that, is not going to exist. So case in point would be OPD doctors or lawyers or accountants.
Mhm.
These are very easy jobs that are very easy to disrupt. And so I think it's not going to be 20 years, but I think in about 5 to 6 years, you're going to see the first layer of this disruption start to take place. So I'm cognizant of that. So while they're in a traditional industrial age school system, just because they're a cusp generation, I personally think most of the education is useless. It's breaking you down into silos and
Mhm.
not helping you think outside the box. Just
Right.
kind of focused on, teaching you kind of an assembly line training. It was developed for the industrial age, right?
Yep.
So I do spend a lot of time traveling with them, because I'm trying to, get them to see different parts of the world, which stimulates the neurons. And so hopefully that'll inspire them to do something bigger than just trying to become a doctor and engineer, which is what our parents always put pressure on us to do. And I don't think there are going to be that many jobs as doctors, engineers, and probably even in finance, like in investments. I think I do early stage investment, which is a lot more qualitative than quantitative.
Mhm.
So I think for at least some time I can get away with it. But if it's quantitative, especially Series B, C, and D, where you have to look at more um, financials and you focus more on DCF and forward projections, I think some of those guys are not going to exist, because an algorithm can do it better.
So do you think like you just go on, let's say SoftBank, dot jp and put in all your information about your company and whatnot, and just connect all your APIs to their API, and within like a few seconds. Because I mean, you mentioned that in the next 10, 20 years, everything will be digital, or at least majority
Mhm.
of it, right? So do you see guys like Masa or Fred Wilson at Union Square, or Connor Perkins just becoming an AI tool where you just go on and connect with your API and just get an investment decision in like a few minutes, few seconds, or do
I
you
mean,
see?
like partners. I mean, for more evolved. So I think there's so okay. So it'll be an evolution, right? So yes, say I'll give you an example. My fund administrators, a company in the US called Carta, and
Mhm.
they basically they're fairly digital in the way they operate. So my APIs for my bank account are linked directly into their system, and they
Mhm.
just take the debit and credit transactions and they just log them, and very quickly they produce financials and statements. And so that would historically require this whole back office and fund administration team that they're able to basically service like thousands of clients. A lot of the big funds are on them as well. And
Mhm.
so it's shrinking, but the process is improving every year, right? So yes, at some point in the future, um, let's put it this way, right? You know how like when you go to Y Combinator today, when a person's interested in applying, so you apply, you have all this criteria, upload a video, and then eventually you get an interview, right? So I think that initially probably the investment decisions would sift out layers. I mean, Chamath tried this in social capital, but he was too ahead of his time. Timing
Mhm.
is everything, right?
Right.
Because if he tried this thing, he was like, oh, let's see if we can use an algorithm and try to sift out. But yes, as more and more companies, rather than sending a data room, they just basically link some of their APIs of their financial data and their, the qualitative data as well, the metrics you identify.
Mhm.
Then the AI can probably sift through that this company meets our criteria, this company doesn't meet our criteria. And
Mhm.
you'd obviously have to develop it custom as a fund manager, right? Like there's attributes I look for. Like I have a success formula that I don't apply from a Western sense. I like,
Mhm.
okay, you have to have the developed market vision, but
Mhm.
you have to have the street smart um, understanding of a frontier market. So if you try to, it's like if I try to come back from the US and implement something in Pakistan without understanding receivable cycles and how people can play you in one of 15 ways, you're going to
Yep.
lose your shirt. So every fund has their own IP and thesis in how they operate. Um, so you'd have to put that in the algorithm. But I do think eventually we'll be able to eradicate. The early stage one, for now at least, is more difficult, but that's more about like human interaction.
Right.
And I'm basically leveraging some of my own failures where basically, or as an entrepreneur, I'm trying to make sure that, will they be able to withstand some of those things? When I tried to do business, and I mistimed it. And so those businesses were the biggest lessons for me because a loss you remember 10 times more than a gain. Because when you
Right.
have a gain, you start to think you're like,
It's a
you're
high.
the
It's
king.
a high.
You
You just
understand. It's a high, right?
yeah.
Um, and for me, at least for me personally, whenever I lose or I do something incorrect, I go back and I keep trying to understand what went wrong.
Mhm.
So I try to look for those traits in founders. That's just my philosophy, right? And because I attempted some things in Pakistan, some things abroad, so I know the pitfalls in Pakistan. What type of how many ways you can be screwed in Pakistan,
Yep.
effectively if I have to. It's a very complex melting pot, right? So I think every fund has their own niche. Eventually, AI will become strong enough if you have computer vision that can actually detect facial expressions.
Mhm.
This thing can go in any direction. But I don't think anybody is. It's not going to be easy for most people to survive this AI boom. And this is the white collar disruption. It's not the blue collar disruption. Historically, automation and things like that would disrupt blue collar workers, right? I think this is going to take out a lot of the white collar workers.
Got it.
So it's better to own your own business and implement AI for efficiency than to be
Exactly.
working for.
Yep. So this is more of a fun question. What are your three favorite dishes in Pakistani cuisine?
Okay, so I love nargisi kofte. That's just a dish my mom used to make, and it's just one of those dishes I like. I love your namak gosht from KP, like lamb. Like
Okay.
it'll be like a dampakht or shirwari,
Right.
or Kabuli food. Like from like specifically a restaurant called Kabul in Islamabad that's basically Afghan food or Persian food. And then let's see. And man, I love just like a traditional. Sometimes I feel like eating like just dal chawal and bhindi. Like it's a nice combo just to have once in a while, right? When I don't feel like having meat and stuff. So I can go on, man. I love food. So there's
Great.
15 dishes, but this would be my top three.
Got it. So, no, we mentioned your kids and whatnot. How does your wife influence your decision making, whether it be personal or business, or let's say a place just like you just moved recently. How much of influence your wife, your partner has on you?
My wife has been a huge strength for me. One in the sense that well, like me, she's lived all over the world. Her father was a diplomat. She's Pakistani. She's also Pakistani American.
Okay.
But her father was a diplomat. So he's been an ambassador to many senior positions throughout the world. So she's
Mhm.
lived in different parts of the world. So that we connected one on that. Number two, she was also a professional. So we met in New York.
Mhm.
She was working in investment banking. So she was in JP Morgan on the investment banking side. Was there for about almost 16 years before we had our kids. And then she's like, I don't want to work. She was almost up for managing director at that time. So left a pretty stellar career. So she's a great soundboard because especially some of the complex, wonky stuff that I'm talking about in interest rates and how that's going to impact everything. This those discussions I can very conveniently have with her, and she understands where I'm coming from. The best part I like about her is that she understands how difficult it is to build a business, and
Mhm.
especially as an investor. So I never get any pressure. So if I'm traveling a lot, or if I'm so she's kind of there as my backbone. That she understands that hey, I'm here with the kids. You're traveling, and she's a pretty powerful professional herself. So there's no egos here, in the sense that we look at ourselves as a team. So that's been a very helpful. In my opinion, I think she's my bedrock that allows me to go out and just focus on my business and then have fun with the family and kids. And we love to travel together as a family. So we
Got it.
travel at least four or five times a year.
Got it. So, what's the one investment that your wife told you not to make and you made that investment anyway?
So she invariably does not. She's never restricted me. So I don't ever discuss like hey, I want to like. And this is a problem with a very like military family child. You don't
Right.
discuss work at home.
Okay.
So so I rarely discuss things with her. But usually if I do ask her a question, she won't give an opinion. She'll say, okay, think about it, and she will more guide me to the direction
Right.
if I'm stressed out on something. So that's actually one of the things, one of the reasons why I like her so much.
Got
It's more always a supportive role.
Got it. And my last question is, which three people would you want to nominate for Take the L interview series with me on Longtrepreneur?
Ooh, okay. I think it would be founders,
Okay.
because I think in Pakistan there are a lot of stellar founders out there that have actually built very amazing companies.
Okay.
But a lot of them that are building companies aren't showing up on LinkedIn and social media and feeds. I actually started doing that recently because our industry is so much about hype, but most of
Right.
my time is spent like helping these founders
Right.
build companies. But at the same time, I do realize that if people don't know about my companies, how are they going to raise, right? Because everybody's turned lazy. They just Google stuff and they look at what's online and they're like, oh, this sounds like an interesting company. Um, so I think it would be those hidden talents in Pakistan. Um, I don't want to be biased and only highlight my portfolio companies, but obviously they're my portfolio companies,
Of
and I think they're
course.
some of the best companies. I think there's lots of talent across the board. I think that one of my Faizan, who created BookMe.pk, which I think is going to be a pretty big deal in Pakistan. It's
Right.
basically the Orbits in Expedia of Pakistan.
Mhm.
I think he has a very amazing story. Someone to talk to. Uh, a company I invested in recently, Haball. Um, that again, that's a backbone systemically important fintech in Pakistan.
Mhm.
The founder is pretty amazing. He's philosophically astute. Quite, I mean, it's just for me. By the way, for me, most of the founders end up becoming friends as well. So while there's the whole board governance side as an investor, but a lot of the soundboard and exchange of information is also as friends, right? So I
Mhm.
get to know them individually. So I think Omar bin Hassan is someone you should definitely talk to. And then there's so many others like Danish Lakhani who's doing MapPay. He's got an amazing story. He's built uh, Pakistan's largest private fiber optic network.
Mhm.
He's also built one of the largest payment systems, a cloud. On top of that, he's got shares in some of the most major companies in Pakistan because his family has stakes in McDonald's, or actually has majority stakes in McDonald's, Pakistan, Colgate Palmolive. It goes on, right? So Laxon Group, but he's a true entrepreneur in terms of his mindset, and tech entrepreneur because he's a techie. There's the guys from Snap Retail. I'm just throwing names out there. There's
Yeah, yeah,
Postex,
absolutely,
Omar
absolutely.
from Postex. If you look at actually Endeavor in Pakistan, Endeavor is a pretty strong network. They selected 7 companies in Pakistan so far that have become part of the Endeavor network at different stages.
Mm,
And this is, by the way, at the top, you've got like some of the biggest fund managers and entrepreneurs involved in Endeavor. 6 of those came from my portfolio. So
mm,
these are pretty, and it's all about the entrepreneurs, right?
mm.
So there's quite a few in this. So I'm happy to share. You can go take a look at them. And I would say that's the story, at least from in my world of a lens that you may want to take a look at.
Got it. Um, no, for me, I've really enjoyed our conversation. Um, I I have done a lot of research on you and the way you invest and whatnot. And you were having this conversation on a podcast with Muzambil, and you sort of, went deep into the bowels of economy and how, like you are pretty much like, and you mentioned something where you're like, even if someone is not paying taxes or, not showing the proper income, but if their bill of on Food Panda is like 2 lakh rupees a month, or let's say every 2 weeks, FBR and and the tax people are gonna know that this person has money and whatnot. So that was where, like, what I was like, let me invite Aftab if he comes, and let me have a conversation myself. So that's what let us here today. So thank you so much for your time and coming out.
No, my pleasure. My pleasure,
So
man.
yeah,
It was enjoyable.
so I just need, say, about 2.5-ish weeks just to go back and unpack, and
Sure,
then
sure.
transcribe the interview. I have done quite a few interviews at this point, so I'm gonna like start posting their videos as well. One thing that I initially thought of, like, people don't have, like, an hour to like spend, because attention spans have become
Yeah,
worse than good.
much much lower. Yeah,
Yeah. So I take all the 4 or 5 hours and condense that long interview into, 5, 6 minutes, 7 minutes to read.
yeah.
So it just takes me time. And I also have a full-time job, and I'm also trying to do fundraising for my own startup as well. So it gets really busy for me at times, but I will publish it and I will send that to you before I publish it, just so if there's any changes that needs to be made, we can work on that. And
Sure.
I hope you have a rest of the night, and have a great time.
No, man. Thank you. Really, pleasure talking to you, and I enjoyed it. So thanks so
Take
much
care.
for having me.
No worries.
It's
Take care.
it was enjoyable. Thanks.
Here. Bye.
Take care. Bye.
If you enjoyed our conversation, give a thumbs up, comment, like, and share. And our next guest next week is the CEO of a $400 million food company in Canada. Until then, stay tuned and take care.